Okay, so welcome to the Director's Cut for September 17th. We're actually going to start off with Justin Kringstead, and then Lynn will be joining us afterwards. And again, we do post the video as well as the audio recording of the Director's Cuts on both YouTube and our website, as well as Apple Podcasts. So lots of opportunities to watch back the Director's Cut and share that with anybody who may have questions about what's going on in oil and gas. Otherwise, I will let Justin take it away with the Pipeline Authority.
Great, thanks, Katie. Well, good morning, everyone. Justin Kringstead, Director of the North Dakota Pipeline Authority. I'm going to keep everybody waiting in suspense if there is a monthly theme for Lynn. He hasn't shared it with me, so we'll see when he arrives what that might be. So we'll get right into production numbers. So certainly without Lynn prompting this, take a look at that left-hand column. North Dakota, we did see almost 56,000 barrel per day decrease from the months of June into July. And some of my comments on that, Lynn will probably elaborate as well. One of the big things that was taking place from a midstream side in the month of July was we had a number of natural gas processing facilities go through turnaround events or maintenance events. And so when we think about in years past when events like that would occur, typically what we would see is a significant increase in flaring during those months because the oil production would continue. What we've seen now is a shift from producers where gas capture and ensuring that all those gas molecules can get to market is critical. And when gas capture is limited, we're seeing wells now choke back or shut in or curtailed in a way that we haven't seen historically. And so midstream constraints on gas will translate into impacts on the crude oil side in ways that we haven't been familiar with in past years. So that is one key thing. The other, in July, you'll see in Lynn's numbers, the number of completions that did occur in the month of July were again lower than what we would consider adequate to maintain or grow production. So those two, completions as well as midstream upsets, are what are the two primary drivers in my mind. Lynn may have some others as well. When we look at those neighboring states, eastern Montana, South Dakota, again, similar trends in eastern Montana, South Dakota, you'll notice they went back about 3,000 barrels per day. So again, the pricing that we've seen here over the summer months, must have had producers in that area turn on some additional wells or increase production from their existing wells. When we look at the month-to-month changes, these were significant month-to-month shifts when we look at both oil production decrease as well as natural gas. We're in parallel with each other as far as what we'd expect from an oil decrease and a natural gas decrease, so no real surprises on that front. On slide 4, we did see some additional market share gained by the pipeline network and some shrinkage in market share used by crude by rail. Again, that Brent WTI spread, I talk about it every month. It's in that environment where it's difficult unless you have barrels committed to a specific rail project. The pipeline economics are simply better in most cases for uncommitted barrels. So we're seeing that with barrels shifting and staying on the pipeline network. Slide 6, from an overall number-wise, it's right around 150,000 barrels per day is the estimate for how much crude by rail is leaving North Dakota. And for reference, that's just a hair over 2 unit trains per day. Folks that like to understand a visual on that front. Where those trains are going, very similar to what we continue to see West Coast, Pad 5 being the dominant destination, and then Pad 1 to the East Coast, picking up about a third of the barrels still leaving North Dakota by rail. Slide 8, I'm just going to pass through again, very consistent pricing. Pad 1, Pad 5 having the highest priced markets. There is one thing I will quick note between Pad 2, which is the Midwest, as well as Pad 3, the Gulf Coast. That's a pretty narrow delta that we are seeing there. Typically, there's a bit of higher spread between what we see in the Midwest and what we've seen on the Gulf Coast. What we have been seeing in North Dakota is a benefit of barrels that get marketed through Clearbrook, Minnesota. If I flip forward to slide 9, It's not been uncommon in the last number of weeks and months to see the Clearbrook pricing in Minnesota premium to WTI, or that Cushing price. So again, that is kind of the first transparent market hub for North Dakota's oil. And certainly when that market is trading at a premium, that's a positive sign for North Dakota and what that net back, what pricing is doing in North Dakota. Again, a wellhead price is what the royalty owners are paid, what the producers are paid on, and then the state of North Dakota from the tax revenue. So the higher that wellhead price, the more benefit to all those stakeholders in North Dakota. So that has been a very positive story. We've actually been sub $6 spreads overall for the last 4 months, whereas years ago we would have said $7 or $8 spread between North Dakota and WTI was kind of average. So we've been trending above average on pricing here for most of the summer. Very consistent with the net imports, exports. We're continuing to watch those fall in line with where we'd expect. Slide 11 now, switching to the gas flaring. And so this is what I was referring to earlier on the gas capture. So 10% flaring, where that increase did occur is on that orange piece, the percentage of flaring from wells that are connected, but the gas plant was down or other midstream constraints didn't allow all the gas to get captured. And so when we look at, there was 5 plants that I have notes on that were either completely down or significantly reduced throughout various periods in the month of July. When you add up all 5 of those plants, it was about 750 million cubic feet of gas processing, not all at the same time. So it was, some of them were staggered, there was some overlapping. So you saw producers react by, again, either curtailing production or working with other midstream providers to have interconnects. And so one prime example would be the Outrigger facility. That was a gas plant that had been finished and had been sitting idle for all of 2021 until July. So during a number of those outages, the Outrigger plant did come online and was taking third-party gas through their processing facility. So again, that collaboration is a very positive sign for the industry as it continues to mature, that folks are looking for solutions for this gas to make sure it's captured and moved to market as efficiently as possible. So, but again, there was gas that couldn't get picked up by third parties, and again, like I said, in many cases that was curtailed or in some cases shut in temporarily until gas capture was able to come back online. And so when we look at slide 12, again, we saw the big decrease in gas flaring percentages from 2019 down through the first half of 21. And now we've had several months of increases. And so this is the first, and Lynn will certainly cover this from a regulatory standpoint, but exceeding that 9% statewide. But he can elaborate on how the regulations work on that. Slide 13, positive news, at least, net neutral on as far as how many new wells are producing gas to how many wells are connected. So didn't lose any ground on that front from the midstream, which is always a positive. The EIA has stayed very consistent with where they're expecting oil prices to be. They're for several months been continuing to forecast a weakening in oil prices in the U.S. or some stagnation for a period of several years and then further growth as we go up. So all the planning that we're doing on the midstream side, this is again what I'm leaning towards for understanding North Dakota's activity in future years and production outputs as we look at midstream needs going forward. There's been some updates to my natural gas model. See here on slide 15, primarily in the outward years as we continue to get more information on gas oil ratios in North Dakota. That's continuing to point to even stronger future natural gas production in the state. So gas capture is going to be critical, again, with not only the regulations, but individual operators, their internal targets, their own expectations for what they would like from their midstream providers. All of that is continuing to evolve and leading towards the need for more midstream investments very, very soon. And then again, a quick update, similar, about 75% of northern border continues to be filled by North Dakota's natural gas and 25% by the Canadian market share. We're continuing to see BTU levels below that 1100 threshold that we always reference. Again, what was taking place there is ethane capture at a number of the facilities. When you look at the natural gas markets around the U.S., not only the Henry Hub price, which is well over $5 here today, significantly higher than most folks had anticipated at this time period, but NGL prices as well are quite strong. So for ethane, propane in particular, is at significantly higher levels than we've seen in recent years. All those things are pushing natural gas liquids production in North Dakota to, again, get captured, get moved to those key markets, and get the value that they can from those natural gas liquids, particularly during times like this where the market is strong. So with that, I know Lynn's not here yet, but I'd be glad to answer any questions I can and delay if we need to.
So you said the Henry Hub was down to 5 cents, yeah?
Yes, as of this morning, it was 522.
And that is driven by the midstream thing.
No, so Henry Hub, that's a price down in the Gulf Coast area. So what's driving that is domestic inventory levels, but also globally. Many of you are following what's happening in Europe and other places around the U.S. or around the globe. Natural gas prices are very, very high. In places significantly high. So all of that trickles back now that the U.S. is well positioned with LNG capabilities where you can connect the U.S. production to global markets on the water, LNG carriers. And that's all leading towards stronger prices here in the U.S. So, as well as some of the disruptions we've seen in the Gulf from Hurricane Ida with production.
I guess this is kind of a two-part question, but with regards to flaring the turnarounds that you're talking about, is it pretty common for turnarounds to happen in summer? And then do you anticipate that flaring condition could improve coming months just because?
Yeah. So great question. For those online, I was asking about turnarounds, and certainly yes. So in North Dakota, summertime is the time to have a turnaround. You don't want to shut down facilities and units if possible outside of, certainly not during the freezing time period. So not only for mechanical, but then just the people working on it, provide some relief to them. Second part of the question was what we're going to see. Yep, will it improve? Yeah. So once we get these facilities all back online, we still had turnarounds happening in August and even some small maintenance events on some of the pipelines here in September. Once we get through that time period and we get to more of a steady state scenario, that should certainly help the gas capture picture. At that time, production's expected to continue to rise, so that's going to add challenges as well. So it's going to be a tightrope walk for quite some time as producers continue to prioritize gas capture as well as maximizing their crude oil output.
Were there more maintenance events this year compared to summers in the past?
Not necessarily. Typically every summer there's, of the fleet, when we look at the 30 plus gas process facilities, there's typically always either pipelines associated with those plants or those plants themselves going through maintenance periods. So a number of the events going on even this week are related to the North Bakken pipeline, Iowa area. So there's been some curtailments on pipe capacity north of Lake Skakawea as tie-ins occur. But
It seems to me, and my memory might be a bit faulty, but there was some concern that companies were not letting people know when they shut a gas plant down for maintenance. Are you getting that information before they shut down?
now with a planned outage or with planned maintenance, yeah, that's coordinated not only between the producers but as well as the pipeline company. So if there's a gas processing plant going down, and there's a way for the pipeline company, if they have maintenance, they can get it both done at the same time. That's a perfect scenario, as well as for producers if they've got well equipment and things that need work. That all is a win-win-win.
Justin, you had, mentioned that pipeline increased share for oil transportation in July. Do you think any of that was a product of, Dakota Access expanding? If that was announced in August, so I don't know if any of that actually happened in July or if that's really.
I think that's going to be, so the question was whether or not the Dakota Access expansion would have been impacting the July numbers. I don't think so. I think we'll have to, once we see the August numbers come out, that'll start giving us the picture of whether or not we'll see more barrels get pulled off the rail network and onto the pipe.
And then I think it was last month, you had mentioned that there were 2 rigs operating on.
Correct.
Are they still up and operating over there?
Still one that I was able to find. Yep.
And I just had one completely different question. I've been doing a lot of stories lately about, like carbon sequestration and CO2 pipelines and whatnot. Do you anticipate that going forward as more and more of these projects emerge, especially pipelines for CO2, that'll be something that falls to you to kind of track and cover?
Yeah, so certainly, and I've already been, working with a number of those pipeline companies just to understand the landscape and what's taking place. So yeah, as more information becomes public, I can try and start wrapping some of that into this information, so we kind of get a sense of what capacities are, what construction timelines and routes, and that would be a good thing to start including once that becomes available.
I have an esoteric question.
Yeah.
You said production in Harding County. Is it Harding County in South Dakota? Mostly, or
I don't have the county specific, but in South Dakota.
how many oil wells are there in South
Glen?
I don't know the answer to that, but it is Harding County. That's the only one that has any.
Yeah. Yeah, I don't
Dakota?
have a good answer for you.
Less than 500.
Any other questions for Justin? And online? All right. Shift
Thank
it
you,
over to
everyone.
Glenn. All right. Ready to go?
Yes. Well, thank you everyone for showing up or tuning in. We're talking about July 2021 production and a few notes that I want to bring out, and then we'll take questions. But when I looked at it, I kind of had to say, oofda. That's North Dakota. We were really expecting, I think, an increase in production in July based on what we were seeing in terms of June activity, what we've been seeing in terms of wells waiting on completion and coming off of that mark. And the industry delivered the opposite. So you saw the numbers from Justin, 1,078,000 barrels a day, fairly significant drop, 5% drop in crude oil production. Only a 4% drop in natural gas production. So again, supporting that theme that you've heard Justin working on for us consistently, and that is that gas oil ratio continues to climb and will continue to climb. I know I spoke to some folks earlier this week that wonder about the numbers, but they're well grounded in history of the Bakken. And so we are headed for an era of a lot more natural gas production and trying to sort out what we're going to do with that. So even though we had a 4% decline in production, that's a temporary thing. And I'm going to try to explain what happened. When we look at production versus the revenue forecast, it's only 2% below revenue forecast. So nothing of real significance there, especially when you pair it with price, which is 34% above revenue forecast. So we're not looking at any kind of negative impact on state revenues or sources for funding for all of the things that the 2021 legislature approved and may talk about here in a couple of months, whatever more that they have to talk about. So production 2% below forecast. price 34% above. Let's talk rig count for a minute. 27, it's not horrible, but it's half of what we really need and anticipate. I truly believe by this time next year, we'll be approaching that number. That, you know, with the healthy bottom lines that we're seeing in these companies and some of the ramp up that we're seeing and the interest in completing wells and also in drilling new wells. But I might as well put some of the interesting news out there. We're no longer number 2. In July, New Mexico passed us up by about 46,000 barrels a day. And so their published number is 1.124 million. And that's about 46,000 barrels a day higher than North Dakota's number. Now, our final number, you know, in a month here, there's always some adjustment, but there's never been a 46,000 barrel a day adjustment. Okay. So like, for example, the June numbers, when they went from preliminary to final, I think they increased by about 5,000 barrels a day. So it's a pretty certain thing. And looking forward, there's 82 drilling rigs operating in New Mexico. So 55 more drilling rigs in New Mexico than in the state of North Dakota. So it's a long-term trend. It's not something that's just a quick flash and then we're back to number 2. So there's some challenge out there. Like I said, 27 rigs. So we've tripled it from the low point during the pandemic, but you know, a 300% increase in a number of 1 or 2 or 9, a single digit number is not a big number. So we continue to anticipate with improved capital investment that by the second half of next year, we'll see much healthier numbers. It's going to be interesting. Next week, the Petroleum Council holds its annual meeting in Watford City, and I am quite anxious to visit with those folks and find out, you know, what their pulse looks like for next year. I really kind of think you're seeing it with one of our leading companies. Continental Resources has 9 rigs running, so a third of our rig fleet, and they tend to lead the pack in North Dakota. So very hopeful that next year will be a very different year. When you look at completions, we hit 53, so we're right on the revenue forecast. We're riding that thing very closely. So the completions and the production, they're tied together, staying together, and we're right on revenue forecast in terms of completions. Interesting to see the number of wells waiting on completion come down significantly, and that's going to continue through the end of this year. For example, we have one company that has more than 20% of those waiting on completion wells, and they are bringing in a frac crew this month and planning to add 2 more before the end of the year. So they haven't brought in a drilling rig. They say that that's anticipated next year, but they are going to hire frac crews and get after their duck wells. And so apparently we're seeing some breakthrough in terms of workforce and the ability to put people to work. I just heard the numbers this morning. I think at the peak of the pandemic, unemployment in the oil patch was 12 to 15%. In June of this year, it had dropped to about 7%, and today it's 5%. So, you know, we've got just about every able-bodied person back to work in the oil and gas business, and so we're going to have to start attracting new folks in as well. When we look at the numbers for Fort Berthold Reservation, pretty much the same story. So why is production down? Well, we had 5 plant outages, gas plant outages in the month of July. Bear Creek, Lonesome Creek, all the creeks, Robinson Lake, creeks and lakes had a problem. No, Bear Creek, Lonesome Creek, Robinson Lake, Tioga, and Watford City all had major plant outages for maintenance or for upgrades. And in particular, Tioga is just now starting to get back to full capacity. So that started in before mid-July. It ran all through the month of August and now about into the middle of September. They're back to their pre-upgrade capacity. So that should go away. It not only brought about 4% decline in crude oil production. I think you can see here that industry tried really hard to achieve the gas capture goals, and they got really close. They got 90%, and so they fell 1% below the benchmark. So what's going to happen with that? Well, we got a boatload of force majeures. So all these plant outages led to force majeures, which are pretty much going to cover the gap for the oil and gas operators. So not expecting much, if any at all, in terms of production restrictions. Look at that natural gas price, $4.77 an MCF. I can't recall the last time we've seen that except for the disaster in February. But this is more of a longer term number. So the electricity shortage in Europe is driving LNG prices up. We can thank Hurricane Ida for most of this, though. We've seen a 10-cent jump in gasoline prices locally. So gasoline prices increases those, maybe 5%, but it really took a huge amount of natural gas production in the Gulf of Mexico offline. And so we're under, in terms of storage, I think we're 7% below the 5-year average and at a pretty significant natural gas price. What that means, of course, is that all that talk that we had a year ago or 2 years ago about net negative on ethane and methane and all the AINs, the AINs were pains a year to a year and a half ago, but no longer. They're all highly profitable at this point. And so you're looking at Bear Creek 2 is just about ready to come online, and the Tioga expansion is coming online. And I had a chance to meet with the One Oak folks earlier this week, and they've got another plant that they're just about ready to announce. So the natural gas price and the NGL prices are attracting investment. And you saw Justin's numbers. We're going to fill Northern Border, and then we've got to figure out something else to do with this natural gas. And there are a lot of thoughts and ideas going into that. We are hopeful that we can continue the orphan well program. I just wanted that's the one thing on the federal side that I wanted to call attention to that's kind of new, is that the House, Congress, is expecting to vote a week from Monday on the infrastructure bill. That bill contains funding for 2 types of grants that North Dakota can apply for, $25 million each to continue the orphan well program. And why is that important? Well, we talked, I was in Wyoming at a CO2 conference earlier this week, and so I'll get to your question, Amy, maybe a little bit. There was a great deal of talk about our carbon storage capacity, and a significant amount of that is in some of our legacy conventional oil and gas assets, in terms of figuring out a way to score ESG and lowering your carbon intensity so that we can utilize those for carbon storage. But they're disappearing quite rapidly. I think we have about half as many conventional wells as we had when the Bakken boom started. So we're going to try to be extremely strategic with this $50 million and go in and take care of the liabilities associated with some of those potential enhanced oil recovery and CO2 storage assets, so that they remain on the table for targeted carbon storage, because that really is the hot topic in today's world. So that's on the oil and gas front. Let me talk just a little bit about that. We had our first permit hearing, as you know, August 12th, and that was for Red Trail Energy. They are In the process, all of the capture modules are being constructed in Texas right now. The footings are being poured for them out there at Richardson. I had hoped that a week from Monday, we could get those permits in front of the Industrial Commission, but it looks like they're a little complicated, and it's probably going to be October, which was our timeline anyway. So if we meet the October timeline, we won't throw the project off track. That'll be our first. I've had discussions in the last 3 weeks on 17 more projects that are lining up behind that one. So it is going to be an industrial boom in southeastern and central North Dakota in terms of utilizing our geology for carbon storage. And the capital is really wanting to flow to those projects. So we're going to create a lot of jobs. We're going to create a lot of wealth for pore space owners, and it's going to be really beneficial to North Dakota's economy. We're going to stand up another segment of our energy economy. I was just listening this morning to a fellow from Commerce. Energy and agriculture together are 75% of North Dakota's GDP. So we're looking at a way to add some value added to both of those and create a place where low carbon fuels are produced and marketed out of the state of North Dakota. So that's almost overwhelming for my staff to hear that number, So we've been sitting and having conversations with people that are lining up. As you know, North Dakota for 12 years has been defining its policy and regulations and working on primacy and setting our state up to take advantage of the geology, and man, it's cool to see all that begin to bear fruit. And so we should have the first state permitted Class 6 project in the United States operating first quarter of next year. And like I said, we got 17 more lining up behind it. So that's going to be a big part of our business. And we truly believe that once we get the carbon dioxide here for storage, it's also going to make a lot of it available for enhanced oil recovery. And what we do in this arena is going to open the door to things like the blue hydrogen production that's beginning to be talked about, which is a possible place for our abundant natural gas to go, as opposed to exporting it. So if I sound a little excited, I am, and I'm just not too bummed out about going from number 2 to number 3. We're going to continue to grow oil and gas production in the state, and we're going to find ways to do value added with all that stuff. I'll take some questions.
Perfect. Any questions in the room?
I just have a real quick one just to get us started. You referenced our rig count, I think it's 27 today. Do you know at the start of the summer?
Yeah, so the question was at the beginning of summer, what was our rig count? And in June, it was 20. At the beginning of the drilling season in May, I believe we were at 17 or 18. So we've nearly doubled it. And we're on the verge of doubling it. But the operators that we have in North Dakota are really into capital discipline at this point, and they are not, boosting the rig count or the frac crew count rapidly. I think next year will be a different story, but again, we have to watch and see what happens to crude oil prices. Down a little bit today, but I can't remember a time in my career when domestic production was so available to offset things like Ida and Katrina and all the hurricanes, and we didn't see price spikes in gasoline and things like that. Now let's hope we can really get into this domestic natural gas production thing, and we won't see such high natural gas prices. But I was talking to someone from Pennsylvania just a couple days ago, and they've got companies out there that are using the same technology we use to produce so much Bakken oil to complete 50 million cubic foot a day natural gas wells in the Marcellus. So this same technology does things for natural gas like it does for crude oil. Thanks. Long answer to a short question, but we were in the upper teens.
And then one other one. What if you're an oil company that has wells in North Dakota and wells in the Permian? What would make you at this point more interested in energy?
So the question was, if you're an oil company and you've got Permian assets and North Dakota assets, why would you be more interested in making investments in the Permian? And for the most part, it's because they're still in a secure the leases or held by production mode. So even though the Permian has been at this now for a number of years, there are still a lot of unheld mineral ownership in the Permian, in both Texas and New Mexico. On the Texas side, it's private. It's private minerals. On the New Mexico side, there is a ton of federal leases that have a 10-year term, and they're getting into the last half of that. They're beyond middle age, and so there's a big drive to take advantage of those leases and prove up those minerals.
And would that be also, so those wells would have been leased on federal land, are they also looking to try to get those permitted, maybe they're already permitted, actually drilled before something happens with emissions?
Oh yes, yeah. So the question was, is there also a driver thinking about what has happened in the mineral leasing arena and how that could spill over into permitting and the ability to drill those federal leases? There is a enormous motivation on their part to drill those leases and secure that production before another negative impact from the Department of Interior. Bet. And as Justin talked about, there's no price differential at this point. We're actually maybe a few cents high to WTI, so there's no price differential. It's not price driven. I think maybe a secondary impact is workforce. They have a more abundant workforce available and easier to regain that employment footing. So we're still struggling a little bit in that arena, but they have found enough workforce to man 15 completion crews and 28 to 30 rigs. So it's slowly climbing. Again, I'm really hopeful that some of these funds that are available through ARPA will go to things like the Watford City Academy, so that we can actually begin to grow and build our own workforce from young North Dakotans, people that know what it's like to live in Western North Dakota and want to stay, make their home there.
Did you mention, do you know how many frac crews are currently in the state right
15.
now? 15.
Yeah. I mentioned it in passing. Thank you, Katie.
And then I did have one other question that also came out.
So I think by year end, we should be at 18. Yeah, if they add one this month and two in the fourth quarter, like they say.
One other also came online. The Biden administration and several European leaders recently announced a pledge to reduce methane globally. What impact can or will that have on North Dakota's production, flaring, etc.?
Right. So we don't anticipate a big impact. Our operators have already gone through enormous facility modification projects to get rid of thief hatches and people opening tanks to gauge tanks and that sort of thing. So with the exception of some goofy things that happen and human error, we're in pretty good shape. We have very new facilities and they're very well managed and operated. We are working through, there's an innovative company called Satellytics that was stood up through the iPipe program to monitor for saltwater pipeline leaks and spills. They are developing the technology to be able to detect methane emissions from outer space. And so we anticipate working with those guys so that we can, if something does happen somewhere, that we pick it up quickly and deal with the methane emissions. But because our facilities are so new and our wells are so new and the way our infrastructure is now laid out in these corridors, we're in really good shape in terms of methane emissions. Now, having said that, just throw a couple numbers out there. In July, we flared 300 million cubic feet of gas a day. And 1% of that doesn't get burned. So that's 3 million cubic feet a day of methane. That's some low-hanging fruit that we're going to be working on with DEQ to how can we push that. And I was on a webinar through the Society of Petroleum Engineers. I lose track of time. I think it was 2 weeks ago. And there's some innovative new technology that they're utilizing to improve that destruction efficiency and push it to a guaranteed 100%. So we're not going to sit on our laurels and say, hey, we've got our thief hatches taken care of and we got new facilities. There is room for improvement in terms of, the easiest thing is to reduce flaring, right? and so that cuts out 3 million a day of methane emissions. But the second easiest thing is to where you have to flare or do something to make that 100% efficient, and then to employ something like Satellytics to find the problem areas. So.
I had, just one thing I wanted to clarify regarding CO2 projects. You had referenced that the folks you've been hearing from are interested in doing projects. I think you said southeastern. Do you mean southwestern?
No, not really. And so, southwestern does have some potential, but part of the problem with southwest, and I don't want to discount southwestern North Dakota because there's tremendous enhanced oil recovery. So I should have said, southern and central North Dakota, because you're right. We've got enhanced oil recovery potential down there that's really awesome. But our CO2 storage geology, the water gets maybe too fresh to qualify for carbon storage as you move south of Interstate 94. If you get very far south of Interstate 94, the formations are being recharged by the Black Hills. They outcrop in the Black Hills, and that fresh water makes them too fresh to use them for carbon storage. So it takes out a chunk of our geology. We're working to refine that a little bit, and see if we can't push that line. When I talk about southeastern, we have a seismic project that we just permitted by Jamestown. And so there are sedimentary formations that are very, very deep around Watford City that are in that perfect carbon storage window in the Jamestown area. So this has the potential to really expand how we use our geology beyond the traditional boundaries of nothing happens east of the Missouri, because there are sedimentary rocks between the Missouri River and that north-south line and the Spiritwood Aquifer that have real potential for carbon storage. So as you start looking at doing it regionally, the one big project that's being discussed brings carbon in here from 5 states. As you start to look regionally, there's potential for southeastern and east central North Dakota.
The one you were referencing here, that's the one that we're right?
That's correct. Yep. Yeah. Question was, is that Midwest Ag? And the answer is yes, it is. So they are They're at Blue Flint in Underwood, and they're also at Spiritwood in Jamestown. And so they're starting the early aspects. There hadn't been a lot of wells drilled over there, as you might guess. So they're starting the early part of geologic characterization that has to take place. Some of the formations that they tested at Underwood that look great are present at the right depths west of Jamestown. People are getting interested in what do I do when somebody comes to my dining room table and wants to lease my pore space?
All right. No other questions? I think that wraps things up.
Thanks for your time.
Thank you.
Sorry, I like to be